So have you ever heard the story of Oprah Winfrey? She grew up in extreme poverty, wearing potato sacks as dresses. Today she is one of the richest women in the world with a net worth of over $2.6 billion. And you might think, sure, it's easy for her because she earns so much. But that's not the whole story. The key to her wealth and that of many others isn't just about high earnings. And let's be honest, while 2.6 billion might be a bit ambitious for most of us, even reaching a fraction of that can change your life, right? I mean, who wouldn't be happy with just a few million? The real message here is that there is much more achievable wealth than you might think. So, curious to know how? I'm going to review why your net worth skyrockets after hitting 100K and share actionable tips to help you reach and surpass that mark. First, let's talk about the scale of capital. This concept is crucial to understanding why wealth accumulation accelerates once you hit a certain threshold. Investing larger amounts results in proportionally larger returns. To put it simple, the more money you invest, the more significant the absolute returns will be. For instance, let's say you invest $1,000 with a 10% annual return. After 1 year, your investment grows to $1,100, giving you a profit of $100. Now, if you invest $10,000 at the same 10% return, after 1 year your investment grows to $11,000, resulting in a profit of $1,000. And if you invest $100,000 with a 10% return, after 1 year your investment grows to $110,000, yielding a profit of $10,000. The investment, the risks, and the period are the same in all three cases, but the profits are significantly different. This demonstrates how scaling capital allows for high returns on a larger amount of your money. As you increase the size of your investment, the absolute return also increases proportionately, which ultimately means you grow your wealth at faster rate. The hardest and the most time-consuming part is often at the beginning because you don't have compound interest working for you, so you have to do a lot of that heavy lifting yourself. So the larger your investment, the faster you grow your wealth, thanks to the absolute increase in profits. But that's just the beginning. I analyzed hundreds of wealthy people and discovered sneaky tricks that didn't just transform their wealth, but actually force you to build more wealth and secure financial freedom. In fact, using these strategies could be the game changer you've been waiting for. Now, let's discuss the second factor, the power of compound interest. This is often called the eighth wonder of the world because it allows your money to grow exponentially. For example, saving $1,000 monthly at an 8% annual return takes about 7 years to reach $100,000. The next $100,000 milestone happens much faster, showing how compound interest accelerates wealth accumulation. So successful investing is hard work because it means disciplining your mind to do the opposite of human nature, buying during a panic and selling during euphoria, and holding on when you are bored and just craving a little action. Investing is 5% intellect and 95% is temperament. Wealthy people are really getting this. Talking about game changers, let's start with the third trick that wealthy people use to build their fortunes. And it blows my mind that more people are not talking about this because it's genius. And that's the role of time in the market instead of trying to time the market. Investing for a longer period is crucial, and time is your most valuable asset when it comes to building wealth. Investing $12,000 annually at an 8% return can grow to $730,000 in 23 years. But extending this to 27 years pushes it to over a $1 million. So time in the market beats timing the market, unless you have a crystal ball, which I hear are sold out on Amazon. No! So successful investing is hard work because it means disciplining your mind to do the opposite of human nature. So the longer you stay invested, the more significant your gains will be. Now, you are probably wondering what exactly are people doing to achieve this step. So let me explain this with trick number 4. One of the most effective strategies is to increase the amount you invest regularly. Let me explain. Instead of focusing on finding the best returns, consider to doubling your monthly investment. Investing $400 monthly at 10% yields significantly more than trying to optimize for slightly higher returns. The trick here is to not allow yourself for lifestyle creep.
It's not my fault. They were calling to me, I swear, and they were all on sale. And when you think about it, that means that I am helping the economy.
Normally, most people end up buying more things and expensive stuff the more money they earn. Instead of upgrading your lifestyle with every raise, keep your expenses in check and invest the difference. Think of it as planting a garden. The more seeds you plant, the more flowers you get. Increasing your investment amount can dramatically boost your net worth. Then we dive into trick number 5, and this one is so good it's almost too good to be true. Because starting investing early, even with small amounts, this builds a solid foundation and allows you to benefit from compound interest right away. If you invest, for example, $2,000 per year for 40 years at an 8% annual return, your total investment of $80,000 will grow to approximately $580,000 due to the power of compound interest. So focus on consistent investing habits and use the stock market as a tool to multiply your wealth over time. Starting early is like planting a tree. The best time to do it was 20 years ago. The second best time to do it is now. Unless you have a money tree, then any time is good. Now let's talk about the power of diversification. Because diversification means spreading your investments across different assets to reduce the risk. By not putting all of your eggs in one basket, you protect yourself against the volatility of any single investment. Imagine you invest all your money in one stock and that company faces a downturn. You could lose a significant portion of your investment. However, if you spread your investments across various stocks, bonds, and ETFs, the impact of one poor performing asset is minimized. So the keys to skyrocketing your net worth after 100K are leveraging the skill of capital, understanding the compound interest effect and investing for the long term, increasing your investment amount and developing a good investment habits early and diversifying your portfolio. But how are you going to get 8 to 10% return at your investments? If you are ready to take the next step, in this video I will review my strategy that have historically delivered impressive 8 to 10% returns, perfect for skyrocketing your wealth. So whether you're just starting out or looking to deepen your investment knowledge, in this video I will break it down in easy to understand ways to achieve consistent growth. See you in the next video.